Okay, as we enter a fresh week of trade, let's take stock of the cues that are going to impact our markets over here, beginning with America. Now, if you remember what happened to the US over the weekend, Friday we saw a red for 2 consecutive days, and we also saw the futures dipping into the red about 200 points. That didn't really change over the weekend up until this morning, when the futures seemed to have recovered, even turning positive for a bit and then hovering around the flat line. So there's been a 200-point recovery in the futures, if you want to look at it that way. Now, this is on the back of 2 pieces of information. One, what we've learned is that the US has now approved, the House has approved a $1 trillion stimulus package. This is a new one that the Republicans are proposing, which will contain a $1,200 check going to every single American household. So people obviously like that, and it's going to bring a lot more money into circulation over there. Apart from that, the second force, which is actually counteracting any stimulus or positive news flow, is the rising tension between US and China on all fronts. So we'll see how this stimulus shapes up. Another key thing to look out for the US markets this week, it's also true for Indian markets, but more so for the US markets, is that we have a big earnings week. We have the likes of McDonald's, Pfizer, Alphabet, Apple, and AMD all slated to put out their Q2 numbers. So that's going to keep that market buoyant and perhaps justify those valuations. If we have a sharp drop in earnings, we might see those valuations kind of cascade lower. Now that's the US. Let's bring it across to Asia. Let's remember Japan was on a holiday on Thursday and Friday as well. There was no readings coming in from the Nikkei and the topics. Post-opening this morning, we've seen that there's been a fall in Japan, definitely. Australia, S&P, ASX 200 is flat. And then your Kospi is the only one bucking the trend, up around 0.41% as of now. And the Japanese loss is not minor. Mind you, the Nikkei is down 1.31%, so it's quite a significant fall. EU, we don't have any data from the weekend, but prior to going into the weekend on Friday, markets were weak. The stock 600 was down 1.8%. Tech shares tumbled a lot, 3.8%, kind of mirroring what we saw in the US a little bit. And then all your sectors were majorly in the negative in Europe. So that's how the equity market shaped up. Now you have to look at the commodities, oil and gold. Oil prices actually moved up. But US-China trade tensions again is acting as a counterweight on that. China is one of the biggest consumers of oil in the world. So we don't know if these relations worsen, exactly what the impact will be on US crude prices. But for now, firmly holding above 41.29 for WTI and above $43 for Brent. So those are healthy levels. And it'll be interesting to see now what the crude inventory buildup is as we come to the end of this quarter, as well as what the demand is, given that cases don't seem to be slowing down. Now coming across to gold and silver, both are continuing to rise. Gold is now above $1,900, quoting at $1,914 per ounce. Silver's playing a bit of catch up at $23, nearly $24. But both those metals clearly, as equity markets are volatile, valuations seem too high to justify. They've run up a lot since March. Clearly, people with money that's liquid are preferring to park it in something safe like gold and silver, and these prices don't look that they're going to cool off anytime soon. So if you take all this into account, the SGX Nifty at 6:45 a.m. this morning indicated a mild positive start. But let's remember here locally, we have a few forces to grapple with, namely the RBI warning, which came out over the weekend, saying a huge pool of NPAs could be coming to us very soon. Apart from that, our cases are also climbing. We're now at 50,000 cases per day. So domestically, the immediate Q is not too positive, and we also have a very big earnings week lined up ahead of us. RIL will be posting its earning, so we'll be looking out for all those numbers.